let's take a moment and recognize what is it that we are uh, purchasing, right? Where do we shop? We're shopping on an Amazon or a Flipkart, especially in COVID-19 and the kind of circumstances we find ourselves. This has almost become default buying behavior. How are we interacting? We are interacting on through social media on Facebook, broadcasting on Twitter, uh, messaging on WhatsApp, right? We're doing calls on a Google Meet, some when it works, or Zoom, where it works a little bit easier, like right now. We're watching Netflix, Amazon Prime, Disney Hotstar, and the technology that we use, in terms of the products, the mobile phones, they're iOS or Android, and that's an Apple or a Google. There is no Indian company over here, right? We have become such large consumers of technology and products and services from companies in the West that uh, we've almost sort of finding ourselves with very, very few technology, at least products which are domestic. On the flip side, if you think of it, yes, of course, India is a very high kind of technology and technical workforce country, and we've got an Infosys and a Wipro and so on. But these aren't companies whose products that we use every day. Of course, they're firms which are primarily a B2B firm. It's not a B2C or a business to consumer firm, right? And all of these brands that you can see today, and many similar like them, does enjoy a pride of place in the brands that we hold highly and well. Speaking of what we have been doing as Indians, right? We have been traveling a lot more. Across the last 8 years, the amount of money Indians are spending on travel has increased by 200 times. That's not 200%, that's 200 times, right? So in the last year, I think India spent about $7 billion or so on overseas expenses. Secondly, student education. Because as wealth in India has grown, the capability of us to be able to afford education for our children overseas, do short-term courses and the likes, have also increased. And that spend itself has gone up about 40 times in the last 8 years. And thus we see, you've got this evolving Indian consumer, which we sort of had in the last slide. We are large consumers of products from the West. And we suddenly are also seeing that we clearly have this need to be spending in the West, right? These are liabilities. When you want to be, when you're traveling, whether it is for a week or whether it's for a few months, you want to be able to have a set of, maybe it's a bank account or so on, with the capability of being able to spend far lesser on their foreign exchange and the processing of fees that you'd end up spending as compared to what it would be today. On something like education, a person, for example, if you're just sitting in India and you've invested all your money in Indian funds or Indian stocks, and then suddenly your child's turned 18 and you want to send them overseas now to study, you have to hope that your Indian rupee investments have done well, number one, and secondly, that the rupee itself has stayed stable. And we know that a country like India, of course, we've been having an average depreciation of 4 to 5% on the rupee year on year. And if you think of a year like the last year, the rupee has depreciated about 10%, right? And that's where our thinking must sort of tend to change, where we can start building a corpus where you can say, like you have an SIP in India, but you can hopefully build up SIPs for meeting those future liabilities. And thus it becomes quite important for us to now thinking of ourselves, yes, we are a set of consumers, but then we're also needing to have a capability to invest such that those liabilities, those expenses that will arise over the next year or so on will hope, or in the next many years, is something that we have saved up for appropriately. And then really speaking, how well have the Indian markets done vis-a-vis the West? So we sort of see in the last decade, from 2010 to 2019, the orange bar, the orange chart is S&P 500, which is the 500 largest companies in the US, versus the Sensex, which is the 30 largest companies in India. And it's outperformed almost 2x. And this is in spite of, our GDP growing extremely well over the last many years. right? Then thinking of it in terms of the size of the market, right? The Indian market cap is approximately $2 to $3 trillion, and that's the range that it's been in the recent past. Vis-a-vis the US markets are, 30 trillion, right? So 15 times that. Um, and that is quite important also because it doesn't matter then as to where companies are, they will tend to always seek liquidity in the larger markets. You can either be, playing in a small pond or in a much larger pond, which attracts a far greater number of investors to it. Uh, for example, when Geo Platforms recently said, and they've raised a lot of money, that they would like to be able to, they most likely will look to listing overseas in New York or so. This is the reason, because there's far greater liquidity, there's far greater amount of capital available there that can invest in many of these stories, which there just isn't a sufficient amount of capital for in a country like ours, in India.